A very good evening to everyone. So this is Vaishali. I'm a product expert of Zoho Books. As I mentioned earlier, I'll be hosting today's webinar session. So we'll start the session right now. So a little bit about the session itself. As I said earlier, this is a 11-part webinar series in which we'll be covering all the report categories which are available in Zoho Books. In today's session, we'll be talking about the business overview reports that are available in Zoho Books. So before we proceed with the session, repeating few housekeeping activities. So this webinar is hosted in our in-house platform, Trainer Central. And if you have any questions during the course of the webinar, please do post your questions in the questions tab. Our trainers will be answering them via chat. And we'll also have a Q&A session at the end of the webinar. Apart from that, if you're facing any audio or visual issues, please do reach out to and post the details in the chat. Our trainers will be able to help you out on that as well. So during the course of the webinar, it's a recorded webinar. Apart from that, so all the participants or all of you will be muted, and once the session is over, we can have a Q&A session as well. So thank you so much for joining us today. So without any further ado, let me start with today's session. So as I mentioned earlier, this is a 11-part series wherein we'll be covering different categories which are available in Zoho Books. And last week we had a webinar on how to customize your reports and how to get in detail or granular information from your reports using various customizations which are available in Zoho Books. In today's session, we'll be covering the business overview reports category. So the business overview reports has profit and loss, balance sheet, cash flow, and movement of equity. So as I mentioned earlier, in today's session, we'll be covering the business overview reports. So as you can see in the business overview reports, we have profit and loss, we have cash flow statement, we have balance sheet, we have cash flow forecasting, and movement of equity. We will be concentrating on these reports alone today. So the first set of reports we'll be looking into is the profit and loss report. So the profit and loss report has three variations, which is standard profit and loss, the profit and loss schedule 3, and horizontal profit and loss. Let me go one by one and explain in detail how these reports are calculated in Zoho Books. The first set of reports that we'll be looking into is the standard profit and loss. So the standard profit and loss, as you can see, is divided into 5 categories, 5 sections within the report. So this report itself will have 5 sections. First one is the operating income, second is cost of goods sold, third is operating expenses, and then we have non-operating income and non-operating expenses. So under this particular report, you have 5 different sections broadly classified based on the account type, under which broadly categorized based on the account type. So the first section, which is the operating income section. So operating income is nothing but all the transactions which has happened via a direct income account. So in Zoho Books, if you are creating transactions with the direct income account, those will be shown in the operating income section. If you can notice over here, you also have a column, or if you also have an account called discount. Let's have a look at this discount category. So discount often entails the amount that you are giving as a discount for your customers. So as you can see here, most of the income transactions often are reflected in the credit side. So if you take an example of general income, as you can see, all the transactions are in the credit side. It means all the income transactions are usually in the credit side. However, when you have a look at our discount account, so if you have a look at the discount account, all the amount is shown in the debit side. This signifies that even these transactions, which are even in the income account, are in the debit side because it should be reduced overall from the operating income. So these are discounts which are being given to the customers, which indirectly is sort of like an expense to your organization. Hence, it will be in the debit side and will be reduced from the overall operating income. Apart from this, you also have another account called other charges in Zoho Books. Other charges is nothing but adjustments or any details that you're adding in the adjustment section while you're creating an invoice or a bill. Those details will be added in the adjustment sections or other charges account. So now we have seen the other operating income section, as I mentioned earlier. So operating income will have all the transactions which have the account type income. Next, we have cost of goods sold. So in Zoho Books, there are two ways in which the cost of goods sold values is calculated. So in case if you're a service-based industry, or you just handle with not inventory tracking goods, in those cases, the cost of goods sold will signify the amount that you've directly applied in a particular bill or invoice. However, in case if you have inventory tracking items, so first you'll be creating a purchase bill in which you'll be associating the inventory item that you have purchased. Let's go to this particular bill that I've posted for purchase of an inventory item. As you can see over here, there's no cost of goods sold account involved whatsoever. The bill which you have created for the purchase of items include your account payable account, the input IGST or CGST account, and the inventory asset. So whenever you're purchasing an item, this will automatically come into your inventory asset account. Only when this inventory asset is sold or invoiced, the inventory asset will move from, the amount will move from inventory asset to the cost of goods sold account. Let's go to an invoice and I can show you the invoice transaction also. So as you can see over here, the amount, so once this particular inventory item is invoiced, the amount from the inventory asset automatically moves to the cost of goods sold account. So when you have a business wherein you are tracking your inventory, the amount which is there in the inventory asset account will move to the cost of goods sold account only when you're invoicing that particular inventory asset. Unless and until the asset is not sold, it will remain in the inventory asset account, which will reflect in your balance sheets. So this is the way, this is called perpetual inventory tracking in Zoho Books, and this is how we calculate cost of goods sold in the profit and loss account as well. So let me also show you an example of a different report in which you will be able to track the items coming in and out of your business. Let's take the FIFO cost law tracking. So the FIFO cost law tracking will show you what is the bill in which you have purchased an item and what is the invoices or the transactions in which the amount item is going out of your business. So out of your organization. So you can use this FIFO tracking account or FIFO report to keep track of the items that are coming in and going out of your organization. Apart from that, as I mentioned earlier, only when a particular item which you have purchased and is inventory tracked, when it is sold, the amount will come into the cost of goods sold account. And apart from that, if you have any other account with account type cost of goods sold and you have transaction in those account, those will be shown in the cost of goods sold section. So now we know how cost of goods sold is calculated. Let me iterate again. So whenever you're creating whenever you have an inventory tracked item, the cost of goods sold will get affected only when you create an invoice for the inventory tracked item. If there is no invoice, the inventory asset purchase will be in the inventory asset account. I hope that clears. Let's go to the next section, which is the operating expenses. Operating expenses is nothing but the expenses that you're incurring in your organization. These are your day-to-day admin expenses, electricity expenses, automobile advertising expenses, and so on. Thus, similar to how you have discounts in your previous in your organization for customers, you also have discounts for your purchases as well. So in such cases, the purchase discount account is used for tracking these purchase discounts. If you go ahead over here, you'll see the purchase discount option, which will indicate the purchase discount you have been given by your vendors. So usually all the expenses are in the debit side. However, when you are getting a purchase discount, it will be shown in the credit side of the report. This indicates that the expenses, that the discount has to be overall reduced from the overall expenses that is happening in your organization. Hence, any discounts that you have incurred in your bills or expenses will be shown in the credit side of this particular account. You can use this purchase discounts to track the discounts that are given to you in the bills and expenses. So we have covered operating income, cost of goods sold, operating expense. Let's go and have a look at the other sections within the bill, which is the non-operating income and non-operating expense. So non-operating income involves all the transactions which has happened through the account other income. So if you have any transactions which are happening under the account other income, those transactions will reflect in the non-operating income section. And if you have transactions which are happening under the account type other expense, those transactions will reflect in the section non-operating income. So these two sections involve the account types other income and other expenses. These are not direct expenses and income that are incurring to your organization. Say for example, the fixed deposit interest that you have received, or the late fee payment receipt. These are all not direct income for your organization. These are indirect income, hence will be recorded in the account type other income and will be shown under the non-operating income section. Apart from this, the non-operating expense, that is the transactions which are happening under the account other expense, will be shown in this non-operating expenses. These are direct, indirect expenses, say the donations that you've given from your organization, or the exchange gain or loss that you've incurred for a particular period. Those will be shown over here. And based on all the 5 categories, that is the operating income, cost of goods sold, operating expense, non-operating income and non-operating expenses, the net profit and loss for a selected period will be shown over here. So this is the net profit and loss for the selected period, which is from 1st of April to 31st of March. So let me also share few unique customizations which are available in Zoho Books for this profit and loss report. So you'll see this option collapse all and expand all. So let me also highlight you on that. Collapse all is nothing but when you have a sub account. So when a particular account has sub accounts, those accounts will be hidden and the overall expense or income posted for the parent account including the sub accounts will be shown here. As you can see, IT and expenses, this is highlighted in bold. So this is a parent account which has a total of 4,000 rupees as expense. However, if you want to expand this and see what are the categories under this IT and expense for which you have incurred expenses, you can click on expand all, which will expand all the account, which also includes the sub accounts over here, and you can clearly see what are the subcategories under this particular account and under which account the expense has incurred. So if you want to see a report along with the parent account and the sub account category division, you can use this option expand all. If you want to see only the parent account total, that is all the total including the parent account total, you can use the collapse all section. Apart from this, you can also add a temporary note. So this is a note that you will be which will be exported or displayed in the footer of the invoice. So you can mention this profit and loss were generated at so and so time, or this profit and loss was for this organization, or you can add any footer details that you want to display in this footer section of this invoice, and the same will also be shown when you export it as well. So with that, we have seen how the profit and loss is calculated. To recap, the profit and loss has 5 sections: operating income, cost of goods sold, operating expense, non-operating income and non-operating expenses. So the cost of goods, so in the operating income section, you'll have discount, which indicates the discounts that you have provided for your customers, and the other charges account to keep track of the adjustments that you've entered in your invoices. And then you have the cost of goods sold account, where your cost of goods sold is calculated based on the invoices and bills that you've created. If you're a service industry or if you have non-inventory tracked items, the cost of goods sold will have the value as you mentioned in any of these transactions. However, if you've enabled inventory tracking, we follow perpetual inventory tracking in Zoho Books. So your inventory will, the cost of goods sold will get affected only when the inventory asset is invoiced to the customer. And in operating expenses, you will have the purchase discount account, which will track the discounts that you have been given in your bills and invoices. In your bills and expenses. So with that, we have covered our profit and loss report. So profit and loss report has 2 more variations, which is profit and loss schedule 3 and horizontal profit and loss. Let's also have a look at the horizontal profit and loss and profit and loss schedule 3. Horizontal profit and loss is not has the same values. All the accounts which are which were available in the standard profit and loss will also be shown in the horizontal profit and loss. However, what is the difference? What is the difference between the standard profit and loss and horizontal profit and loss? So the difference is the format in which this particular report is shown over here. So the horizontal profit and loss follows the T-shaped format. So T-shaped format involves the expenses in one side and income in the other side, and you'll be able to see the opening stock, the inventory adjustments, and the purchases, the inventory item purchases that you've done in a particular period. The format of the invoice is different, however the values in different accounts is same. The values which are shown in the standard profit and loss will be the same as the ones that are shown in the horizontal profit and loss. In fact, your net profit and loss will be same as the one that is shown in the standard profit and loss. So over here, as I mentioned, it's a T-shaped format which is unique to most of the accountants, which is unique to the Indian edition and will be commonly used by accountants in India. So the expenses are in the left hand side and income account in the right side. You'll be able to see what is the opening stock, that is your inventory item opening stock, and the purchases that you've done, that is whatever purchases that you've done for a particular period, that will be shown over here. And you'll also be able to see the vendor credits, like if you've created any vendor credits for this particular period, chosen period, those will also be shown over here, and the inventory adjustment. So this is a very different change, like this is one thing that just changes from the standard profit and loss. This also includes your opening stock as well, and the closing stock is also shown over here in the operating income section. So this is the closing stock, so that will be shown in the income section. So as you can see, all the expenses, including the purchases of inventory asset, will be shown in the expenses side, along with the operating expenses and the non-operating expenses. And in this side, the right side, you'll have the income section, which includes the operating income and the closing stock of the particular of the organization during the particular period, and the non-operating income. And the overall net profit and loss, as you can see over here, is shown in this section. As I mentioned earlier, the net profit and loss in the standard and the horizontal profit and loss will be the same, except the format, which is the T format, will be followed in the horizontal profit and loss. So as I said, we also have one more variation which is unique for the Indian edition, which is the profit and loss Schedule 3 report. So Schedule 3 reports are submitted to the or are generated based on the guidelines provided by MCA, and the same way in Zoho Books you'll be able to generate the profit and loss Schedule 3 accordingly. You can click on edit account mapping section to add the accounts under each category, and you'll also be able to add the notes and description section. So for each and every section, you'll be able to design what are the accounts which has to be involved in. You can also take help of your accountant to ensure to do the edit account mapping as required, and you can also add notes and description whenever needed. Once done, based on the account mapping that you've provided, the profit and loss Schedule 3 is generated for your organization. So with that, we have covered the profit and loss report. So in Zoho Books, we have three types of profit and loss, which is the standard profit and loss, the horizontal profit and loss, and profit and loss Schedule 3. Standard profit and loss is a regular format which involves all the sections, which involves all the categories that we've discussed earlier. And then we have the horizontal profit and loss, which is a T-shaped format of the standard profit and loss. And we have profit and loss Schedule 3, which is designed or which is generated based on the guidelines given by the MCA. So moving on, let's go to the next set of reports, which will be the balance sheet. So balance sheet report is nothing but the balances that are available under different asset, liability, and equity accounts. So over here in this section, you'll have three broad categories: assets, liabilities, and equities. Under assets, you'll have your bank accounts, you have your GST payables, GST input and output accounts. You'll be able to see your fixed asset accounts, and under liabilities you will be able to see the tax GST payable accounts and your other liability accounts like loan accounts and so on, and in your including your long-term liabilities account. And apart from that, you also have your equity accounts, which is your which are the account type of equity. So under each section, so for example, if you take the asset section, you will have bank, cash, credit card accounts, a bank and cash accounts, right? So whenever you have a transaction on these account types, all those will be shown in this section. Let's have a look at the equities part. If you go to the equities section, you have three type of accounts, which is the capital stock dividends paid, which are of the equity type account. So any transaction under the equity type account will be shown over here. But apart from this, have a look at two other things, which is the current year earnings and retained earnings. Let me guide you how this is calculated. Current year earnings is nothing but what is your net profit and loss for the selected period. As you can see, this is the same amount which is shown as the net profit and loss for this fiscal year. So the current fiscal year is 2023 to 2024. So whatever the net profit and loss has been generated for this particular period till now will be shown as the current year earnings. However, this retained earnings. So retained earnings is nothing but the profit and loss that is carried over from the previous fiscal year. That is from the year 2022 to 2023 in such cases. That is in this particular case 2022 to 2023. Or in general terms, it is the profit and loss that is carried over from the previous fiscal year. So the current year earnings is the net profit and loss of this fiscal year, and retained earnings is the profit and loss, net profit and loss carried over from the previous fiscal year. So these are two things to note in our balance sheet. Apart from these, rest of the categories are very simple to diagnose. It is just the transactions which are happening under the particular account type. So under assets, you'll have other current asset, fixed asset, and any transactions under these asset accounts will be shown in the respective category, and any transactions under liabilities will be shown in the current liabilities and long-term liabilities account. And we also have equities, whenever there is an account with equity type, the transaction under these account will be shown here. So this is a standard format where you can see all the things in a one single category, like one single line. However, for Indian edition or for the Indian accountants, we have a unique report called horizontal balance sheet, which again follows the T-shaped format. So the liabilities and equities are on one side and the assets are on the other side. As you can see, all the over here again, the values of balances under each account will be the same, except the format in which this report is aligned will be different. Before we proceed with the next set of reports, there are a few more customizations that I would like to highlight on these balance sheet. So if you go to balance sheet, there are a few customizations which are unique to the balance sheet report. First one is the customized report option. So you can customize this report for a particular timeline as required. You'll be able to run this report on cash or accrual basis if needed. You'll also be able to filter the accounts, either if you want the accounts without any zero balance to be removed, that can be removed. If all the accounts should be shown, all accounts will be shown. And if you want the accounts with only the transactions to be shown in this report, that is also possible. Apart from this, you can also compare the balance sheet based on different periods or years that you've chosen, or based on the reporting tags you've created, or even based on different branches. So in Zoho Books, you have branch accounting. So if you have multiple branches and you wish to compare the balance sheet of each branch separately, that is also possible. Apart from this, you can also use advanced filter to filter out the report or the balance sheet report based on any reporting tag or branches, and see the balance sheet only for that particular branch or reporting tag. Apart from this, we also have a unique functionality called custom report. Let me guide you on what custom report is. In custom report, you will be able to customize the available report according to your requirement. Over here, you will be able to edit the account name, the account group name, or even the account group criteria over here, and generate this report as per your requirement. You can change the account criteria as shown. You can also include other accounts as needed, and generate this report or generate a balance sheet as per the requirement that you wish. Over here, you'll also be able to change the headers. So for each and everything, you'll also be able to change the headers if required, and you can save it as a custom report. This customization is available in all our business overview reports, wherein you'll be able to change the header as well. And the preview of the same will be shown in the right hand side of the screen. Moving on, we also have another unique report for our Indian edition, which is balance sheet schedule 3. Similar to profit and loss schedule 3, this report is also designed based on the guidelines provided by MCA. You'll also be able to edit the account mapping as required for your organization. You can add the asset accounts, liability and equity account under the respective section, and provide notes and description if needed. Based on the account mapping, the system will automatically generate the report and you'll be able to share this with the required authority. So with that, we've covered our balance sheet reports as well. So in balance sheet, as I mentioned, the balance sheet reports are calculated or based on the transactions that you're posting in different account types. So we have broadly three classifications: asset, liabilities, and equities. Under asset, you have your other current asset accounts, which includes your cash, bank accounts, and so on, and also the fixed asset accounts. In your liabilities, you have your other current liabilities and long-term liabilities, and in equity account, you have your equity account types, and apart from that, the current year and the retained earnings. So current year earnings is this fiscal year's net profit and loss, and retained earnings is the net profit and loss carried over from the previous fiscal year. So now we know how a balance sheet is calculated and the different iterations which are there available in balance sheet. So next up, we'll also have a look at the cash flow statement. So with that, we'll go for our cash flow reports. So the first one is, what is the cash flow that is coming into your business? So for that, we have the cash flow statement. So the cash flow statement has three sections: cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. So let's see what each of this section is. Cash flow from operating activities. So cash flow from operating activities include the cash flow that is coming in from bills and expenses, like what are the invoices that you are going to get paid, or the bills that you have to pay, what is the GST that you have collected and the GST that you have paid. So all these come under the operating activities section. So you'll be able to see the amount that is you have spent on purchasing your inventory asset, your regular expenses, your income, the loan. All these things are part of your operating activities, and all the cash that you're getting from this particular activities will be listed under the operating activities section. Next, we have cash flow from investing activities. So as an organization, you'll be investing in purchasing fixed assets for your organization in your company's name, or you procure fixed assets for your organization or the employees use. Such cases, say it might be a land, it might be a car, a vehicle, or even your IT asset accounts, right? So those or furniture and equipments that you have done, machineries. So there will be a lot of purchases or cash flow spent on investing the money that you made from your income into long-term investing activities. So for those, you have fixed asset accounts. So any investing or any cash flow from these investing activities are shown under the cash flow from investing activities section. And then we have financing activities. Financing activities is nothing but the cash flow that comes from your equity accounts. Say whatever the capital stock, if someone is putting some money into your organization or you're paying out dividends for your partners. So in those cases, or you have long-term construction loans. So in those cases, those are all your financing activities, and those will come under those cash flow that comes under these financing activities are segregated or added in the third section, which is cash flow from financing activities. So the sum of cash flow from that is net cash from operating activities, net cash from investing activities, and net cash from financing activities. The sum of these three cash flow is the net change in cash. So the sum of operating activities, investing activities, and financing activities is a net change in cash. And what is this ending cash balance? Ending cash balance is the difference between net change in cash and the beginning cash balance. So whatever the cash balance that you have in the beginning, that and the difference of the net cash balance will be shown as the net cash balance. So now we have seen how the cash flow statement is generated. So as I said, there are three categories: cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. So once these reports are generated, so once you have generated this cash flow reports, you'll also be sending this cash flow report to your finance team or even your purchase team to decide on how to go further on it. Say for example, your CFO is asking what is a cash flow statement for a particular period of time. So he can decide on how to take up loans or provide short-term and long-term loans and so on. So in such cases, you'll have to share this cash flow statement to the user. So instead of manually exporting it or giving it each time, you can have this report scheduled. So in Zoho Books, we have this functionality called scheduled reports, where you can schedule a report for weekly, monthly, or quarterly and yearly basis. You can also mention to whom this particular report has to be scheduled to. And if you have additional recipients, that is whoever outside of the organization, those emails can also be added over here. And you can mention whether this report has to be attached in PDF or XLS format and save this. Once done, this particular report will be scheduled and the report will be scheduled automatically or sent to the user automatically on the cycle basis. So you now know how to see the cash flow that is coming, that is whatever cash flow has come in can be seen from the cash flow statement report. But if you want to forecast or if you want to see how much is the cash flow that you'll be getting in the future, so for that we have the cash flow forecasting report. So let's have a look at the cash flow forecasting report in Zoho Books. So cash flow forecasting report. So this is the dashboard of the cash flow forecasting report, where you'll be able to see what is the total money in and what is the total money out. That is till now whatever money has come in and what is the money that has gone out and what is the beginning balance, like what is the actual balance. So as you can see, this is the beginning balance that was there in our cash flow statement as well. So the amount from that will be shown over here, and the system has projected based on various inputs and recurring profiles what is the projected cash flow that you have for the rest of the year, which is shown in this orange format. So whatever the money in is shown over here, whatever the money out is shown in the second section, and what is the actual balance you had from the start of the term will be shown. So this is for a selected period, that is for this year I'm seeing what is the cash flow forecast. So it will also highlight on what is the cash balance in different accounts and what is the projected or forecasted cash balance in each and every account individually. So how is this forecasted? Let's also have a look at the forecast inputs in Zoho Books. So usually the reports are generated, or this particular cash flow is forecasted based on the recurring profiles that you create in Zoho Books. So you might have recurring invoices, bills, expenses and journals. These recurring profiles will have to be configured in this particular report to project or to forecast what is the cash flow coming from any of these activities. Apart from this recurring profile, if you also have certain assumptions, say for example you have some FD income coming in or some FD interest or any external investments coming in. So in those cases you can add it as assumptions. You can click on add assumptions, provide assumption name, the account under which the amount will be deposited to, and you can also mention what is the amount that you will be receiving from all these from this particular account. So, and you can also mention at what date you will be receiving this amount, based on which the forecast will be again recalculated. So these are some of the assumptions that I've already created, and you can also repeat it. So say for example, if this is a deposit on a monthly cycle, you can also put it as a monthly cycle and have it added over here. And if you want to mark it as inactive or delete, that is also possible. So based on the assumptions and the recurring profiles, so these are the included recurring profiles, based on this the system will automatically forecast the cash balance for the rest of the year. As you can see, the cash flow forecast follows the same pattern as the cash flow statement report. You'll have the cash flow from operating income and the finance activities and the investing activities. So the months which are marked in orange is the forecast that is done by the system. So with this report, you'll be able to rightly forecast and add assumptions and see what is the cash flow that is coming in the upcoming months. So with this, you'll be able to also figure out what is the loan or what type of short-term and long-term loans or debts that can be acquired by the organization. You also have an instant helper where you can see how the forecasting report works. So now we've seen the profit and loss report, we've seen balance sheet, which indicates what are the balances under different asset accounts and liability accounts, and we've also seen what is the cash flow coming in and out of the organization, and also have a forecast on what is the cash flow that will be coming in. So next we'll also have two more reports in Zoho Books under the business overview section, which is the business performance ratios and movement of equity report. So first let's have a look at the business performance ratio. So business performance ratios are often calculated from the balances or the details from the previous fiscal year. So this report we have over current ratio, gross profit ratio, debt ratio, net profit ratio, asset test ratio, receivable turnover ratio, debt to equity, and operating cost ratio. What are these ratios? These ratios are nothing but different ratios which will guide you on how your business is performing, what is the health of your business. So if you click on this instant helper, you'll be able to see what each ratio refers to. So let's take this receivable turnover ratio. So receivable turnover ratio tells you how efficiently you're collecting payments from your customer. Say you're creating 10 invoices, of which 5 invoices or 8 invoices are immediately paid. In such cases, your net turnover ratio, that is your receivable turnover ratio, will be high because you're collecting these, or you're efficiently collecting these payments on time. So what is the formula for calculating the receivable turnover ratio? That is net sales by average accounts receivable. So if for a particular period, if the sales is 1 lakh and the amount that you've received, so account receivable refers to the account or the amount that you've received for a particular period, right? So net sales divided by average account receivable, that is receivables that you've received for the period, will give you the receivable turnover ratio, which is 1.1. So you're efficiently collecting the payments from the customer on time. Similarly, we also have other ratios as required. You can click on any of these ratios and check out the instant helper section to know more on how the ratio is calculated. These business ratio reports are often used to decide, as I said earlier, is often used to decide whether you can acquire short-term and long-term loans, or whether you are capable of providing loans for your employees and so on. So these report ratios are often used by the finance departments to figure out the how the business is performing and what is the health or the cash flow that is coming in. So these reports will be helpful in deciding your short-term and long-term plans. Apart from that, we have the movement of equity report. Movement of equity is nothing but you have a lot of equity accounts in your organizations. This report will highlight what are the transactions or what are the balances in each of these reports. So the capital stock and dividends paid are equity type accounts. So the transactions which are happening under this capital stock and dividends paid account will be shown in the respective section. And the current year earnings, as I said earlier, discussed in the balance sheet report as well. So the current year earnings is the net profit and loss for this fiscal year. That will also be tracked in the equity account under the current year earnings section. So you'll be able to see what is the opening balance, which is usually the retained profit and loss from the previous fiscal year. So the opening balance given over here is usually the retained earnings, which is shown in the balance sheet, which will be taken as the opening balance for the movement of equity account. And then the current year transactions under the equity account will be shown in the changes in equity section. And the closing balance is the sum of opening balance and the net changes in equity, which is the closing balance of this particular report. It's a very useful report to track the equities that is coming in and moving out of your organization. With that, we also have the option, so for example, if these reports have to be exported or taken a printout of, we have options which are shown over here, such as the share option, with which you'll be able to share this report to other users in the organization. You'll also be able to configure the permissions over here, whether you want them to only view the report, or whether you want to view and export the report, or whether you want to view, export and schedule this report. So you can share this report with the respective permissions as well. Apart from this, you can also have this report printed as per your requirement. You'll also have an option of editing this print preference, editing how this report has to be printed. You can choose to add these details if needed. So when it's getting printed out, the page number, who the report was generated by, the date, the time, all of these details will also be printed out. So once added, as you can see, all these details are shown in this section. Apart from this, you'll also be able to export the report. So you can export the report in PDF, XLSX, XLS, and export to Zoho sheet format. And whenever you export these reports, you'll also have the option of protecting your financial financial reports with the help of a password. So when you're sharing it with your accountant or other people in the organization, to protect unauthorized access to this financial information, you can have it protected with a password as well. So with that, we've covered the reports which are available in business overview category. We've discussed on the profit and loss report, balance sheet, cash flow, and the business performance ratio and equity reports. So with that, we've covered a business overview category. And going forward, we also have, as I mentioned earlier, it's 11 part series webinar. We will also be covering the other reports which are available. With that, we've come to the end of the session. So we have seen all the business overview reports, how each of these reports are calculated, some of the unique functionalities in this report. So one of the common queries that we often get asked is the cost of goods sold part of it, how it is calculated. And I'm hoping in this session you are able to gain knowledge on how the cost of goods sold in our reports are calculated, and how perpetual inventory tracking works in Zoho Books. So I'm glad to have you all here in this session. As I mentioned, if you have any questions, or if you want to list out if you want to list out any use cases for your organization, please feel free to post it in the questions tab. We have our trainers who will be answering them right away. Thank you so much for joining us today. We'll also have a look at a couple of questions now. Yeah, so we'll start with our question answer session. So the first question that we have is why vendor credit goes to COGS even if the bill was going to inventory asset. So in such cases, so you're creating a bill and the asset is there in your inventory asset account, correct? So the item which you have purchased will be there in your inventory asset account. So in case if this particular asset is damaged, or if you have to return this particular asset to the vendor himself, so what will you do? You'll be creating a vendor credit for this. So when you create a vendor credit, so this is one of the vendor credits. So I'll just share my screen. So this is a vendor credit as I've created. So as you can see over here, so the vendor credit is created for an inventory item. So the accounts involved are account payable, inventory asset, and cost of goods sold. So whatever amount which you have paid for purchasing the inventory will be shown in the inventory asset credit side. So the asset has been purchased, but now it's going out. So while it is going out, it will not go directly from the inventory asset account. It will go via the cost of goods sold account. So whatever asset was purchased will go to the cost of goods sold account first, and from cost of goods sold only it will go outside of the organization. So even though the asset was purchased in inventory asset account, while it is moving out either as an invoice or a vendor credit, it will move out only via cost of goods sold account. Hence, the cost of goods sold account is shown in the journal that is created for vendor credits. Hope that clarifies your question. Hey, can I know how banking reconciliation in reports can be correlated with our bank statement? To know about this, we also have a banking report session soon, so you can also register for it. So in the banking reconciliation report, you will be able to see what are the transactions which are categorized and what are the transactions which are non-categorized, and with that you will be able to side by side see what is the what are the statement lines that have come in and what have been categorized and uncategorized. So to know more on this, please do register for our banking webinar detail report section. So how can I check which invoices are due today? So you can use our aging summary details, which usually indicates what are the balances or the amount that you have to receive for a particular timeline. You can use the AR aging details, AR aging summary, wherein the current one indicates all the invoices or balance which are due as of today. So current is 0 and 1 to 15 is whatever is in the next days. So that is upcoming days, whatever it is. So whatever balances that you have to get from a particular customer as of today, that is today, will be shown in the current column. So you can use this AR aging summary to view the same. Is there an option for confirmation ledger to take confirmation from customers and vendors? I'm not sure exactly what this question is referring to, but I presume this is related to getting approval on the invoices or the bills that you've created for this particular customer or a vendor. In such cases, you can have a look at our customer and vendor portal, wherein the customer can log in and see the invoices and the bills that you've created for them. They'll be able to interact with you via the custom portal as well, customer and vendor portal as well. So you can use this portal to get confirmation on a particular transaction from the customer. We have another question. Can we put discount journal? So you can use discount accounts in our journals. However, as I mentioned earlier, so usually you are creating an invoice or a bill while you are creating discounts. So you can associate the discount directly in the invoices and bills itself. How to create a custom report in balance sheet. Could you please share steps on this? So you can go to the balance sheet report. So say for example, let's go to the balance sheet report. So over here under the customized report section, you can click on save as custom report, and here you can mention the date range for which you have to customize the report, and then the customized rows and columns section. So customized rows and columns section shows the header for each and every category. So as I mentioned, there are three broad categories: asset, liabilities and equity. So if you want to change the header of these account types, and you want to change the account headers which are shown over here, that can be added, and then customize the report layout and the report preferences and save it as a custom report. So this is the steps that you have to follow. Bank summary and analysis. Is it available in Zoho Books? Yes, we have a banking module wherein you'll be able to reconcile your bank statement and transactions. We also have a banking report to see what is the reconciliation status of a particular bank account. What is petty cash? So petty cash is nothing but an account that is used to track your cash on hand. So any expenses that you're paying via the cash on hand, so those will be shown in the petty cash account. So it is an account that is used to track the cash that you have on hand. How to see negative and positive? I'm not sure what you're incurring to negative and positive. If you could explain more on this, we'll guide you on that as well. So if you're adding a bank account, that is bank overdraft account. So overdraft account is usually a liability account. So you can add it as another current liability in Zoho Books, and you can record payments via that account. So you can add it as an account type under the account type other current liability. Current liability only, right? Bank overdraft.
Yeah. Liability.
Okay. So next up, we also have another question. So bank overdraft, as I said, you can add it as other current liability account. Total receipts and total payments in bank accounts report, is it available? Yes, we have a banking report, banking reconciliation status report, wherein you can see this. Apart from that, if you want to see the payments or the transactions that are happening in your bank account, you can use this account transaction report in Zoho Books. So in Zoho Books, under the report category, you have a report called account transaction report. So in account transaction report, you can filter out the report and see what are the transactions that has happened through a particular account. So over here, you can choose the bank account and see what is the amount going in and out of your bank account as well. So you'll be able to run the report and see what are the transactions that are happening in and out of your bank account and check the details as required. What does manually added transaction mean? So manually added transaction is nothing but the transaction that you're creating in Zoho Books, like your payments and your expenses. So those, if you're creating in the respective modules with the bank account added, those will be shown as manually added expenses or manually added transactions. So that will be the transactions that you've created in the respective module. So if you go for any of these account, you'll have the section called manually added. Where you'll be able to see the manually added transactions. So these are all transactions that you've created in books and which are added in the respective modules. How can we pull a TDS report? So TDS report is available directly in the tax summary reports. So if you go to the reports module, you'll have the TDS summary report right over here. So you can get your TDS report from this section. You can select the time period and get the TDS report over here. So we have another question: how to generate salary reports for a particular employee. So if you're using Zoho Payroll, you can use Zoho Payroll for such cases wherein you'll be able to generate salary reports for a particular employee. But if you're using Zoho Books to also manage your salary reports, you can use the expense reports. So you can there'll be an option called expense by category, expense details report, or if you want, you can also associate the employee while you're creating the expense, and you'll be able to see the expenses by employee account. So over here, you can use if you're using Zoho Payroll, you'll have a detailed report available in Zoho Payroll itself. If not, you can use the expense details report to see what are the expenses that you've created for your salary alone. So that will be helpful for you. Yeah, so we also have a question: branch wise receivable and payable report. So right now you don't have a separate filter you won't have a filter of segregating it branch wise. However, you can add the branch column. So as you can see in the show or hide columns, you can add the branch column and the branch details will be shown over here. So based on that, you'll be able to see the receivables. So you can see you can add the branch column and get the details if needed. But if you have the receivables, so if you go for the balance sheet over here, you'll be able to customize the report based on filters, include the branch and get the branch details as well, like account receivable and payable branch wise. So that is also possible. We have another question: how to download balance sheet year wise. So year wise, if you prefer, so for example, you can, as I said, you can use the compared option. So if you compare it based on period, so you can mention what is the previous years and that mention the number of years, and over here you'll be able to see the balance sheet for previous years as well. So you can use this report and you can take a printout of it if required. If you want it to be separate, like all of these years in separate, then each of these, like you have to select the date range separately and then take a printout separately. So that's the possible answer. That's the possible solution over here. Can Zoho integrate with income tax website and fetch TDS detail? It will be easy for TDS reconciliation. We hear you. We are working on different integrations for TDS filing as well. We are hoping to have this TDS filing option also available in Zoho Books soon. So hopefully you will have the option of TDS filing in sometime soon in the near future. Do we have separate reporting section for reporting tax? We don't have a separate reporting section for reporting tax. Reporting tax can be used while you are generating the reports, and you can filter the reports based on these tags. So we don't have a separate report for reporting tax. These tags are used to segregate the data or filter out the data as required using the tags. So that's why we are using it. Thank you so much. We've answered most of your questions via chat or on live Q&A sessions. However, there are a few questions which are left out. We will reach out to you via email or call and help you out with these questions as well. Thank you so much for joining us today. I hope today's session was helpful and you are able to understand or grasp how the business overview reports works in Zoho Books. If you have any questions or clarifications, or if you want to know more about these business overview reports, please feel free to reach out to us and call us. And this is a recorded session and we will be sharing you the recording, as well as these recordings will be published in YouTube, so you can always check out these videos at a later time as well. Thank you so much. You've been an engaging audience. I hope today's session was helpful for you, and definitely we will be reaching out to you and answer your questions even via email, so that the questions are not missed. So thank you so much and have a good day. This is Vaishali. Bye bye.